All right, good evening, guys. This is the Tortoise Nightly Strategy Podcast for December 1st, 2020. I'm going to be recording either a preview or a rehearsal of my presentation on lessons learned from systems thinking that I've been invited to give to the Super Trader Summit at the Tharp Institute on Saturday. So I'm putting together my little list of notes. It's a 2-hour session they've allocated for me, so it'll probably be 90 minutes-ish, plus an opportunity for questions. So it'll at least be 60 minutes, maybe a full hour for questions. We'll see how it goes. Typically, I'll prepare about 3 hours of material for a 90-minute presentation, but I'll make that link available once I get that recorded. All right, so let's take a look at what we got here. Okay, so we had this previous like a congestion zone here, where price was holding generally north of the dragon, except for one spike yesterday that closed at the top of the dragon. So now we were wondering, is it going to be this? Is it going to be that? And today we got the answer. That was, I think the market was pretty happy with the economic team Biden announced. I've got some concerns with them. But the market seemed pretty happy that it's back to business as normal. Again, the piece of this puzzle that's going to have huge implications is the result of the senatorial races in Georgia to determine if there's going to be Republicans retaining the Senate or if that's going to roll over to the Democrats. That has huge policy implications. Biden's speech, I thought today was pretty good. He said the right words for economic stimulus and that help is on the way, except for the part where he said affordable health care instead of saying Medicare for all. That's an opportunity that comes along, I think, certainly once a generation, maybe once in a lifetime, and they're just blowing it. In the middle of a pandemic, this was a chance to really have an FDR moment. And the corporate interests to make healthcare profitable in America are winning that battle. And it's disgusting. However, the equity lords liked the sound of all that, and the market gapped up and finished pretty strong. And now it's back on the correct side of the Rl30, to make it an A trade once more. We said yesterday that these were probably B trades here in the land between the rivers, between the Rl30 and the PSAR extension, which continues to march uphill. So yesterday we saw as the first test of this middle space since price crossed above the Rl30 back here. And today kind of voted to get back on the correct side heading north. So we got a new 10-day high, a 30-day high, and an all-time high just today. So that's pretty good. The 10-day low is going to be here in place for a while, but we're noticing now the dragon's starting to get pretty steep and favorable here. So that's good. Next target to the upside really is just a statistical, a measure of excursion, and the Z2 at 373 is next. And then off the chart, but about 386 would be Z3. But all systems go. We are well above the previous hump of the RL10, and even the Dragon now has moved above the previous hump of the RL10. And the RL10 itself is all the way up here, so it's comfortably above its previous support level. So this is all systems go. Let's take a look at what worked today. Excuse me. All right, so the S&P was the big leader in the U.S. indexes again today, up 1.09%. The Russell finished up 0.93%. The Dow 0.61%. And there was a big shift out of treasuries today. It dropped below that key price of 160 down to 157.5, so it's off 1.5%. That's that risk-free rate of return, remember? So the things that underperformed the S&P on the sectors would be healthcare and consumer discretion, energy. They were in the green, but they underperformed. And then oil exploration and oil itself were down 0.5 and 1.1 respectively. And then clean energy off another 2%. And so now that swing exit in PBW up there around in the high 90s is starting to look pretty good. And I'll continue to be stalking that one as we discuss this weekend. I'm going to continue to do those weekly speed runs, I think, as part of the updated advanced swing course starting in January, and that's going to become part of a ritual for that course. I'm probably going to do it twice a week. I'm thinking like Tuesday nights and Friday nights. Tuesday nights to catch up on the frames that came out of the weekend with a couple days of price action, and then so there will be an intraday adaptation. So I think Tuesdays and Fridays is probably, or Tuesdays and Saturdays will probably be the strategy session just for the swing traders. My intention on that one is going to be to just make that available to silver and higher subscribers, but also for folks that don't want to subscribe but want the course. I am looking at a price range between $1,000 or $2,000, and then that'll be a 10-week course plus 3 months of additional support. So that's essentially, it's either going to be $1,000 or $2,000, but just part of the silver subscription and higher if you are already a subscriber. Boy. All right, let's the symbols that let me stay with the sectors. The sectors that outperformed the S&P then. Materials, tech, and finance, kind of the big three. Materials was about equal to the S&P, and then a fractional improvement on tech, and then 0.5% improvement on finance. Emerging markets and Japan both crushed it at 2% today. Bitcoin up 2.36. I'm seeing a lot more commentary on that in the on Bloomberg TV and CNBC Business as more hedge funds and holding companies and governments are taking that as a serious contender for management of cash positions. Like there's a company called MicroStrategy Shares, who has kind of converted to being just a Bitcoin holder. So they're, you can buy shares of stock, but what they're doing with all their free capital was basically investing in Bitcoin and then reselling their shares to the public. So I got to do some due diligence on them, but that's I can see more of that happening in the future. There's some discussion about how does China figure out how to get a legitimate alternative that can still remain kind of under their control to handle their half of the economic world. You can see that happening pretty easily. So the Bitcoin Trust up 2.36. Mexico up 3.5. Ackman up 3.5. Wheaton Precious Metals 4.6. Brazil crushed it at 5%. Silver up 6%. Now the companies that really dominated today, Alcoa, Cliff, U.S. Steel, 3 of the top 4 in the stack, all for material. So there's people buying those companies. You remember the ones that we talked about this weekend? There's people buying those companies at a rate much greater than the sector. XLB at 1.1. These guys all up around 6, 7, and 9, almost 10%. Virgin Galactic 6.5%. The Triple Techs 4.4%. Apple, Tesla, Intel, Nucor, Google, Amazon, all better than the S&P. So this was full speed ahead for the U.S. Tesla was less than persuasive, though, to me. There was not a lot of intraday buying. My spider sense is that the bulk of the shares that were needed to be bought in order to front run the addition to the index have been bought. So that initial surge is in play, and now it's a question of how much more grind is there. I'm going to be looking with interest at the relationship between Tesla's volatility up to this point versus the volatility that it'll have when it's now, a passenger on the index. Is the S&P going to dampen the Tesla volatility, or is Tesla going to juice the S&P? I mean, obviously there'll be some both, but it'll be interesting to see if this is a new stage in the life cycle of Tesla and its volatility. So we'll see how that goes. On the downside, there were some interesting companies that got crushed today. So Nikola Motors down 15% and NIO down 10%, the two competitors for Tesla. So even if that's a pair trade or a trio trade, if you will, those two companies got smoked. So Nikola is getting crushed because this week they made a strategic change in public as to the vision for their company. So they just gave their CEO and founder the boot, and he had a very expansive view of what Nikola could be, I think, to set himself up as another cult of personality like Musk and try to bring that kind of fanboy investing into Nikola. But he got the boot. And the guy that has taken over has very strong connections to General Motors, and the vision they have for the company now is very much a General Motors kind of vision, which is like being first at being second. In other words, not pushing the expansive innovation as much as they are trying to deliver a targeted improvement to their product line, which is semi-trucks, within their competitive space, and really trying to deliver in a practical way. So that's good news from a stable business model, but it really shifts their orientation away from a Tesla style cutting edge brilliancy prize kind of a company to one, this advanced technology that can deliver on time. So it'll be interesting then to see how that unfolds. And I think the retreat from Nikola right there is all the fanboys leaving the room when they hear that they're not going to try to compete in the conceptual space with Tesla, I think. NIO, don't know the story why they're getting smoked, but both of those are so volatile that any huge sell-off like that automatically makes me interested in them on a tactical momentum reversal play. or as a continuation play for the downside, because there's clearly some short-term trading interest in them. That's not for the faint of heart. Some old standbys did not make the grade today. Home Depot, Caterpillar, Walmart, kind of the three-headed monster of stable Main Street there. NVIDIA, Devon Energy, Twitter, and Procter all underperforming. Right, so mostly, to me, the stories today were the smackdown and the alternate energy electric cars, and then the crushing performance to the upside of the metals. And then I'm just going to say, hey, Brazil and Mexico are back in play. I mean, that's going to be some real goodness for us there. All right, so I want to take a look at some trades of the day and just kind of illustrate what I was up to today. All right, so this was Alcoa. This was a big gap up and a continuation. This was kind of a standard story in the metals, and the big moves happened early and often. So here was the pinch and the slight sell-off into the close yesterday, a gap up which held. I waited 5 or 8 minutes and then bought the continuation pattern in here at 20.85 with about a 20-cent risk. I added a second position on the resumption. I treat that as a Kata 2, where it had a chance to fail through and it didn't. And the absence of volatility didn't worry me at all. So I added the second position at about the 30-minute mark coming into the day. At the same time, I'm raising the stop to here, and then I'm just committed to the Bollinger Band mean the rest of the way. I considered a third position here, but I had other things going on, and it became a span of control issue, and I had all my bullets committed. So the other ones were working good enough that I didn't want to take anything off the table to reinforce Alcoa. So I just kept 2 on Alcoa and committed to the Bollinger Band mean in order to spend more time on the other things. So I took the routine exit and took the routine reentry, and then made a couple execution R on this one because the position size was double because the risk size was half. So here with the 20-cent risk, I'm playing 2,000 shares and 2,000 shares, and then this is 4,000 shares of Alcoa. Let's see, next one up is Cliffs Natural Resources. This had a very similar feel to it of Alcoa, a little bit more volatility early because they're a mid-cap company instead of Alcoa being a large cap. And this was that tight Z3 pinch at the close. It gapped up. It moved one of those Z3 boxes off the bottom, and when it held support at the VWAP and started taking off again, I bought it in that little pocket there. I think of that as Kata 2. In this case, it's the little-known supported summer crossing where you have a surge, a pullback, and it resumes. So I'm in with, and then this is about a 10-cent risk. And then I considered a second position here, but again, by this time of day, I was already all in. But this would be a natural place to add a second position, either in that little pocket that is formed by the curve, or if you wait for the excuse me, the emerging dragon. Either one of those is supportable. It makes a peak here after riding the Z2 line, and I just take the routine exit here. There's a sideways quiet channel forming. I wait for the breakout above. The winter has turned to spring, and it breaks above the Bollinger Band mean, but there was nothing left in it. And it gave it 10 bars, and it came back, and I just took the scratch at the Bollinger Band mean instead of waiting. I was going to get out of it shortly anyway, so I just took the scratch. So that's Cliff Natural Resources, part of the metals group. Here's U.S. Steel. This one, get to U.S. Steel here. Yeah, so U.S. Steel started off with the same entry that I just made in Alcoa and and Cliffs Natural Resources, whereas they were going good and there was chances to get 2 positions in. U.S. Steel rolled over, came back to the VWAP, and so I took the scratch here. It then kind of just bottomed out right here and then started taking off again. So I bought the Reentry on the breakout above the Rlxd here. I took a second position on it because now it felt like it had gained some traction and everything else was working. So I bought it above this Z3 breakout in here. And then just rode that one to a traditional exit up here. This should be on that the Bollinger Band main. Misplaced my dot. That's right. And so that's a routine second position and a routine exit with the Bollinger Band main. I tried the Reentry on the Rlxd. I consider that a Kata 2 because we have a low, a higher low, a second higher low, and then the cross and a tight stop. It gave about 3 bars. hit the previous Z3 and then rolled over, and I just took the scratch. I was not in the mood, did not have the will to play to play this trade down in here, and I was also out of gas emotionally by this one. Although that would be under other conditions a routine entry. I had span of control, so I couldn't take that. I saw it, but I didn't take it. Shifting over to Mexico, our hybrid frog, and so after I had gotten well started in the metals, I noticed the nice big gap up in Mexico. The double bottom was in place. We were 10 minutes into it and it started to gain traction, so I just put the usual hybrid frog move off the bottom onto that one. The second, and then it just took off. And then it was the second position, taking out the Z3 pinch. By this time, I'm just committed to the Bollinger Band mean stop. There was an opportunity for, a third position in here, but I was already fully committed in the metals, and so I didn't have any bullets left. So I was just committed to following it with the Bollinger Band mean, took the routine exit. Other things were going on, and I just never got a sense that Mexico had much more room in it today for gains, because it kind of just was chugging along like a train. And in fact, it started getting weak here. I considered some short side, but I was pretty happy on the long side, and I didn't want to play a short move back to the VWAP. So this was a reasonable place to get a second or a reentry if I was going to. This would be a reasonable reentry here too. Right in here, this is a super pinch, and it just never really left the station. The last trade to show today was a Bitcoin. This was one where it had a significant gap down. Unlike all of the other plays today, this one was a big gap down. Actually, not a big gap down, but a gap down and then just straight to the north. And so I played I treated that as a harsh winter, and I just played that as a supported spring crossing, and then using the PSAR in the usual way plus the VWAP. So that's just the standard play, and this is a trust company, so I got to buy it on limit order. So I'm satisfied just having like one scoop on this thing because I'm still learning how to trade Bitcoin. And on this one, I was more sensitive to getting out of that thing sooner. After 10 bars and no further work, I was happy just to go ahead and take that's about probably 3 execution hour. So all told, this is probably a 12 to 15 execution hour day, with the metals really dragging me north, and really good moves in Mexico. Brazil was tradable today too, but Mexico was just the better target. Yeah, so that's that. Let me get to the daily, and so we can get you out of here and onto your prep. That's me researching the 10 ox herding picture lectures from the very well respected Zen master. So I'm going to try to do justice to his work. While I'm waiting for that to load up, and I saw Antonio was in here. Antonio's been doing a great job going through the daily strategy podcast for this whole year so far, and I think what I'm going to do is just capture all that into one special real life year-long live trading exercise in the year of COVID, and have that as a separate special package just for the the platinum members. I'm gonna start a new hybrid course in January that is hopefully a more concise and organized version of the lessons that we've learned. But I've been mining a lot of the goodies out of that, and Antonio's been documenting each one of those podcasts with a nice one-page Cornell note sheet. So we're going to just keep beavering away on that and put together kind of a documentary, if you will, I guess, with a guide to each of the daily sessions, and we'll find some clever way to get that done. If you're interested in working as an intern on that, I think we could figure out how to do that. Give you access to the material, and with some discount coupons for next year, we'll figure out some way to get a work study program in there. And it may be that you just sign up to be a teaching assistant for one of the small groups of people that will take the new courses in January. So I'm open to expanding the access to the material, and learning by teaching is so incredibly powerful that I'm convinced that that's really the way to do it. Is groups of 4 or 5 with one designated teaching assistant that gets a break on price for helping their small group get together and work. So I'll publish something on that this week, I think. But to kick off the first week of January. Thinking out loud there. Let's get this going. Page. Alrighty. Just looking at the stamps, I wonder if I should probably see if I can make some stamps. Figure out how to use them to do markups. Yeah. Task for another day. Okay, so the daily, all things bright and beautiful, bright and bullish. The ox is marching and pulling that wagon. He's overbought in every dimension. A 173 on the 2-day cycle. 16.2% above the 200-day moving average. The ADX still in neutral conditions there, getting better. ATR is all the way down to 1.15%. Just a couple weeks ago, that was at 2.2%. So that's just a fraction out of above quiet. It was quiet last week. So we are right on the cusp of getting back into quiet. This is just feeling like a warning sign to me. We saw this one here. That was up kind of the same So whenever I see that kind of yin-yang rolling over, and it was here, I see those as transition points. So we're going to be very mindful of that, since I'm a great big coward all the time. There's a volatility spike brewing when Rlxd is at 2%. Channeling and overreaction, no signals. The big winners in terms of minimum distance away from their 10-day high: Apple, Walmart, Microsoft, Nike, and Home Depot. That's a pretty good lineup, like the 27 Yankees. The Max Pains, that's all energy right there, along with there's some Devon and Chevron are in the energy sector as well. Just trying to draw the square here. There we go. Yeah. Next up is the Dow 30 Tactical. Lots of dojis today. CRM is really interesting now. As we read across, it's a channeling and an overreaction. So on a swing basis, that's pretty cool. It's 2.5 to 1 on the auto framer, and it's the number one in terms of max pain range compression. It was a big percent loser today on a day when the market crushed it. And it was down 2%, and it's down almost 6% for the 10-day period. So that is really an anomaly in the Dow. That's a lot of people selling CRM when the Dow had a really good day. So that should be that marks it as a stock of interest. McDonald's is a 5-day down. So here's McDonald's. So we'll take a look at McDonald's as we read across. It was a percent loser today at minus 0.6. And so that's a candidate. On a day when the market was big up, it was down, and a 5DD. So that means it's ripe for a rebound or a catch-up trade, if I can say it that way with McDonald's, with your permission. Procter & Gamble is always interesting. It's a doji. It's 2.6 to 1. And so just on the basis of trade location, Procter & Gamble is very interesting. Okay. We had breakouts. There's Apple. We talked about that this weekend, about him playing catch up, and it's started to make the breakout. It was up 3% today. That could be the signal that it's moving. Cisco finally shaken off the doldrums and made breakouts on the 10-day, 1 month, and 3 month. And then Intel, same thing. Just as I'm writing them off, they had a pretty nice move in Intel on the 10-day and 1 month breakout. All right, next up is the Etf Tactical Summary. Joe, I see that you're in here tonight. So you had asked me in passing, to do some thinking and talking about, big picture alignment. That's what you're hearing me do here, is trying to draw the connections between some of these like interest groups and sectors that are moving. And now we drill down into the Dow 30s, these oxen that are pulling us north. Those are the industrial sized companies that big money has to flow into. So their behavior not only is tradable, but it gives us insights into what's working in the sector. So that's one of the ways that we can get alignment in our view of what's going on in the world. I'll say more about that on Saturday's podcast with the super traders too. All right, so let's see. EFA had a big all-time, like a breakout here, 10-day, 1 month, 3 month, and 6 months. So now when we take a look at the numbers of ETFs that broke out on every time dimension, this is a really positive view. So who were they? Well, there was metals and mining, and that was a big percent winner today, up 4.5%. Not a surprise when we look at the metals companies. So that was a big mover today, expecting more from them. And XME is a way to play that strength in the metals with a very liquid ETF. It's both volatile and liquid. You know, the S&P was up 1%, I think, or something like that. Yeah, up 1%. Metals and mining was up 4.5%. So it's giving you that extra juice. Now, it doesn't have as much as the individual companies that we saw that were up 6 or 7%, but 4% is plenty smooth enough to get that move, and then you don't have to narrow it down to which company that you want. Like instead of playing 3 different trades, I could have been more focused on XME, and that's going to be something that I look at to leverage tomorrow. Mexico and Brazil moving together, along with Latin America. The big breakout in that whole region is happening, and Europe, IEV, was a big breakout again today, and the S&P itself was a big breakout today. So all of the biggies are moving simultaneously. And then the final one, tech had a breakout of this 10-day NDX. So that could be a resumption of the tech leadership, which had been lagging some of these other sectors for the last couple of weeks. But this is the broad tech sector. So that breaking out, and then the NASDAQ itself also broke out. So lots of strength across the board. Next is the auto framer. These are the lagging companies that still have a good distance to go to get back to their 10 days. So these would be things that if you were looking for catch-up trades or you were kind of a value player, getting the latecomers to the party, you know, these are companies that are lagging and that are hustling maybe to try to get back up to the pack. And so you see some names like Amgen, Coca-Cola, and Salesforce, all with favorable reward to risk. So that's kind of I like looking for things that are kind of not on everybody's lips. So as an example, what I mean by that, almost like a sleight of hand. You know, everybody will be talking about, hey, Tesla and Bitcoin and the FANG companies all did great, and the metals were obviously great. And so the things that could be moving tomorrow that are less volatile, so therefore smaller risk per share, therefore a larger position size and maybe a more manageable trade, some opportunities can appear in things like Procter, Coke, Salesforce. So that's the mentality that you have to have, is that you're looking for things on secondhand sale, if you will. Not everybody's beating their path to that door, but therefore, if you see them, that's probably not a momentum player. So there's going to be less volatility, but there's actually some value players involved in there, and that's the kind of value mentality that you want to adopt if you're looking for targets on that in that section of the report. Daily squeezes. These are the ones that had small range days today. It's interesting to note that the S&P is in there. So even though it was nice, a lot of that gain was in the gap. And so the follow through in the day was not as big as you might otherwise believe. But McDonald's, which was, I think we said, was a 5-day down, but also a daily pinch, that's pretty cool. And mid caps and pharmaceuticals in play. So yeah. Finally, the MACD histogram. We still have a lot of things in the fall, and so therefore the symbols that are in the summer are the ones that had less of a pullback during this sideways chop of the last 4 days. So we got the Qs and the tech, Brazil and oil and Latin America. So these are all on my short list for interesting targets by being in the summer. Same thing on this side. Apple, Microsoft, Honeywell, Home Depot are all things that I like. And I like that McDonald's is in the summer, even though it was a 5DD. So let's keep an eye on that one. The multi-time frame NDX, lots of big winners in the Dow today. But take a look at the ETFs were the ones that really show you how broad-based and expansive globally the moves were today. So even though the S&P was nice, Brazil and Mexico give you that extra juice, and emerging markets as well. Silver took a nice pop, and maybe that's the industrial application of that there. Gold had a nice pop. And maybe that's just guys getting smart, buying the sell-off and acquiring inventory for the inevitable pullback in the equities. So that bodes well for wheat and precious metals, as well as the gold and silvers. And that's everything I want to cover tonight. We'll get this published and posted. Thanks for hanging in there. And we'll start up the new index for December and in the usual way. So take good care, guys. We will see you in the chat room tomorrow.